Hey guys, I'm back. Sorry for the long absence there. I really just had to take some time off. We had a whole bunch of stuff happen, um, just family wise and all that. And then COVID came through the house again. This time it got everybody, including my wife, who's immunocompromised, and it made its way to my mother, who's also immunocompromised. And then I got sick last. So I'm just kind of spent the last few weeks looking after everybody, and now I'm just getting better myself. We've all got all of our shots and everything, but it still really knocked us out. It's really knocked me out. Just more tired than anything. So here we am on the upswing and heading out to pick up a grocery order. What else? Anyway, I just wanted to put out a video of some kind, say hi to you guys, and I'm way behind on my Q&As, so we're going to get on to a bit of that today. And the first thing I'm going to start with is actually an email question I got. And I answered it in the email, but I just wanted to mention it to you guys because this is really important. And I get a lot of questions from people, email, comments, whatever, about this same type of thing. So in a nutshell, this one fellow traded micros for a while until he had doubled his account with micros. I believe he did that with real money too, and then decided it was too boring. It was like not enough, which you can understand at $1.25 a tick. $5 a point's not doesn't feel like you're making very much, even if you're making 10 points a day, right? So he decided he was going to graduate to minis, and I think pretty much immediately had trouble with that and found he couldn't pull the trigger on trades. And I don't know if he lost money or not, but it obviously didn't work out according to plan. And that's one thing that I find a lot of people get wrong. You figure you're going to learn on micros and you're going to actually trade minis. Eventually, yes, but if you go from one mini to one micro, that's not even doubling your position. That's 10x your position. But that's like going to the roulette table or something and putting down $10 every time, and then suddenly putting down $100, or $100 then putting down 1,000 every time. And you can see how that could get you into trouble pretty quickly. You're going to be a lot more nervous. And then the net of that is, once you're profitable on one micro, your next step is two micros, not one mini. One of the questions the fellow asked was, how do you make it seem like an insignificant amount of money as you scale up? And the short answer to that is just make it so incremental that it always kind of seems the same. If you're able to double an account with micros, even if it's a really small account, that's a pretty good accomplishment. If you go to two micros, you're going to double that account in half the time if you keep trading the same way, and so on and so on. And it's going to be such a small increase, and it's still double your position. That's plenty to increase at once. And then after that, it gets to be less. And then once you get to 5 micros, well, you might want to skip and go from 5 to 7 to 9 and then to a mini. But very small increments, and expect it's going to take a while. Like it's not something that's going to you're not going to go from a micro to a mini, and be successful at it most likely in a couple of months. It's like a year-long thing. But if you can get there in a year, then you can get to 5 minis by the next year, or maybe even 10, depending on how consistently you're trading. And if you look at it on that kind of time horizon, that you need to expect to put a couple years into this, once you're profitable, a couple years before it really pays. The thing is, after that, it pays really well, and it can continue to pay for a long time. So it's well worth the investment. You need to take it slowly, increase in the smallest increment possible. If you ever run into trouble, go back to the last size that was comfortable. Take it slowly to the point where it feels like you're wasting your time. And before you know it, you'll be to a position size where you're actually making real money. And most importantly, preserve your capital, because that's the only thing that's going to let you keep trading. You need to have your capital or you can't trade. Increase the smallest increment possible. Take plenty of time to do it. If you ever find that you're sliding back, you're starting to get anxious of pulling the trigger, go back to the last size that worked for you. Take as long as you need to size up to the next and to the next. Go slow enough that it feels like you're wasting your time with play money, and then that's exactly what will happen. It will always feel like play money because it's a small enough incremental increase in size that your confidence comes along with it, your psychology, your physiological reaction to pushing the buttons comes along with it, that it still feels like nothing. That's how you'll get somewhere.
Try again.
All right, close that time. Okay, so one thing I should probably just get out of the way in every one of these videos too is I trade the ES, the full-size ES, on a 4,000 tick chart. The bands are Keltner channels set at 2.5 standard deviations around a 20 period. Trade Navigator has a question about Trading View and actually trading with it. He's wondering how does it work as far as like how can you actually place trades on it. You may have figured this out by now, but for any of those of you who are wondering, I don't use TradingView to actually place my trades. I just use it for the charting. And the first time I heard of somebody using a separate platform for charting than placing their orders, I thought it was the weirdest thing. But eventually I realized that some software is better for charting and some is better for actual execution. For instance, Sierra Chart is not, I mean, it does have tons of features. You can do anything with it, but it's not near as easy for setting up and navigating and switching between charts and time frames as TradingView is. But it's much better for execution because it's super light on your computer resources. It's literally never crashed on me, ever. It has never once crashed on me. And it's just fast and easy. It's got nice big buttons on the interface. Everything's good. So the way it works with TradingView, though, is you can do both on TradingView. You just have to log in. There's certain brokers it works with. There's more all the time, like more every month kind of thing. They're always adding brokers, stock brokers, futures brokerages. It started really with Forex, so there's tons of Forex brokerages and CFD brokers and stuff that work with it, and it's just integrated right into your chart. So you can place your trades on it if you want, and just use it that way. The same as if you've tried demo trading on it, you would just log into your live account and place the trades that way on it. So it works quite well. I mean, you do need to get a paid package if you want it to update any faster than once per second, and just to have multiple charts like I have on the same layout. But overall, it's a pretty darn great platform. It was night and day moving to TradingView when I was trading Forex coming from MetaTrader. Any of you have ever used MetaTrader or MT4 before? Yeah, it's a whole different world. And when you're trying to make charts and different time frames of charts and switching back and forth quickly, TradingView is amazing for that. And when you try and do that on Sierra Chart, it almost feels, I'm not going to say it feels like MetaTrader, but it's more in that direction. So, but yes, you can absolutely trade on TradingView. Dwumper has a really good question. One thing I've really noticed is I'm having a lot of brain fog this last bit, and it's just, stuff's rattling around in there. But I feel like I've already answered this, but maybe I did in an email. Either way, we're going to talk about it quickly here now. Dwumper has a problem where he's finding that essentially he's moving to break even really quickly, and 70% of the time he's right with the direction and gets very minor heat on them, but he cuts off his profits too early. And then when he's wrong, he's taking full loss type of thing. So doing okay overall, but based on looking over my past trades, if I could kick this habit, it'd be much more profitable overall. Any tips on overcoming this? Well, the way that I handle that is, and you'll see me punch out early most of the time. I very rarely let a trade hit my target because I get impatient, or I see something where it looks like it might be stopping or it's not moving quickly enough, or most often it's really just there's money sitting there, so you want to take it and then be done. Now, as far as moving to break even, I'll share with you kind of the I don't have a hard and fast rule, but in practice how I deal with that. I generally don't move to break even until I'm as much into the trade in profit as I had risked on it. Most of the time, you'll see me move to break even around 5 points, something like that. So that's usually, I'll generally let the trade go unless something happens that makes me realize that I'm totally wrong. I'll just punch out whenever, but that's rare. Usually I'll let it go at least until I can either move to break even or it hits the stop. So that's a reasonable criteria for moving to break even. If you've got, first of all, you got to risk enough on the trade too. You can't risk 2 points on every trade and expect to do well, because the noise level, the background noise in the market, it's varied over the years. And there was a time when I did trade, I tried trading 2 point target, 2 point stop, just total scalping. And I tried 4 point target, 4 point stop. The 2 point doesn't work right now because the overall background level of the noise in the market is too high. To me, I'd say the background noise right now is at least 3 points as far as just vacillation around price, even if it's not going anywhere. So you need to have enough of a stop. But if you move to break even, say if you've risked 4 points and you get 4 points in profit and you're starting to get nervous, move to break even. And if you're really starting to get nervous, punch out. Then at least you've got 1 to 1. So if your win percentage is over 50, you're still making money. But that is a danger, of course. You don't want to wind up taking a whole bunch of small wins and a few big losses that make up for all your wins. That's very defeating also. So there is a balance there. But to me, I always kind of say this. I never, you make money by closing trades in profit. With the caveat that you can't have your losses be either too many or too big. And I find, I will usually only take a trade if I have a reasonable risk reward of 2 to 1 minimum, where a reasonable target is 2 times as far away as where the stop loss has to go. Most of the time I don't let it get there, either 2 to 1 or 3 to 1, I should say. Most of the time I don't let it get all the way there, but I'll generally close it for at least 1 to 1, and generally better than that, unless I think that I'm wrong or it's just taking too long. So that's one way you can do that. You can try it, maybe try it in demo. Let's test it, see how it works for you. Of waiting to move to break even until you're at least as much in profit as you risked. And as far as taking your profit, well, try and take that at least 1 to 1. And the thing is, the more the better. But once you're at break even, worst case scenario, you come back to break even, you don't lose any money. But you don't want to be taking a whole ton of break evens either. It's better than losses, but it's not better than wins of really any size. So one thing you'll find though is as you do this longer, as you get more confidence, it's easier to let your trade stretch out and stay in it a bit longer. Now I still have trouble with that. I dare say if I was trading 1 micro, I could probably hang on longer. But then again, I don't know. It all depends. I guess maybe it'd be worth trying that sometime. But anyway, hopefully you can try that and see how that works. Graminator has a question on here, which might actually be a good suggestion for you guys to try. He says, why don't you use grid lines on your chart, since I'm always talking about the 2.5 levels? Because I just don't like grid lines on my chart. I've never liked them. As soon as I saw charts that didn't have any lines on them, I thought, great, I got to have that. And I just like it better. I like the look of it better. It's cleaner. However, it might actually make a lot of sense to have those. I'm really used to watching those levels. I can pretty well see them on there. But, it certainly could be useful for people. So maybe consider trying that if you're having trouble watching these 2.5s. Roger Harris has a question. It's something probably a lot of us people can relate to at one point or the other. I live in the States Eastern Time. I work 2 jobs, so I'm unable to trade during the day, but wondering what you thought of the globex session, primarily between 6 and 10. Not interested in staying up in the wee hours for the London Open. Too old for that. Okay, Roger, good question. And maybe somebody else can chime in here, too. But as far as trading the U.S. equities during that time, 6 to 10, there's not much. There's not much movement. Everything's very slow. To trade the S&P or the ES type of thing, I wouldn't. Someday I should record a session, at least show you guys how price goes there compared to the daytime. But really, I wouldn't call it that tradable. You do get a little bit more activity in the Tokyo Open, yes. The currencies also move around the Tokyo Open, so that's a possibility. And Treasury bonds sometimes can, but they generally don't move very much. outside of the New York hours and the London hours, but mostly the New York London overlap, which is kind of the ideal time between 9:30 and 11:30 Eastern. Not the best for trading the indexes, however, it could be possible on the currencies. There's nothing to say that you can't try demo trading it and see how it works for you. The one thing about it, it's much slower, and it gives you lots of time to take a trade, but there's not a whole lot of movement. Axel has a question about what software I use to split the monitors on my screen. It's called UltraView Desktop. I'll link it. I got another video that you may have not seen before, but I believe it will be up there somewhere, about using a 4K TV as a computer monitor, a bunch of the ins and outs. But UltraView Desktop, it's a digital product. It's about $100 Canadian, so it'll be less American, and it works really well. There's a new version 3 that works a lot better than the version 2 did. I've been very pleased with it, especially the new version. There's a few little quirks, but overall it gives you very similar functionality to having individual monitors, to the point that you don't really have to think about it, and it's pretty light on system resources too. So it's a snow day today, even though it's not snowing, but we're supposed to get freezing rain, so the buses are canceled, the kids are off. Just dropped a couple off at the skating rinks. Das Katzen has a question. He's wondering about when I sort of have like a soft target or soft goal of 10 points. Just wondering if that's points or ticks. It's points, so 40 ticks. So now I don't have a hard and fast goal, but I like to ideally get 10 points a day. It's like a soft target for me, soft goal. And of course, it's different for different instruments, right? Because 10 points on the Dow, for instance, is 10 ticks, because one tick is a point. And it's the opposite, say, for crude oil, where 1 point is actually 100 ticks, because a tick is a cent. That's the difference between tick and point. The tick is sort of like the pip in Forex, except the pip in Forex is generally always a tenth of some kind, or 100th. Whereas in futures, you get, the quarter point ticks in the ES, and you even get the fractional ones, say in the treasury bonds, of 1/32. So one tick is 1/32. Stocks used to be that way too. It used to be traded in fractions, but pretty well everything else has moved on, but the bond still stays with that 1/32 minimum tick. Now I'm going back to the rink to pick them up. Steve says, if you tried essentially like placing a strangle on it, it's about news trades, but just placing a buy above a certain amount and a low limit order type of thing below a certain amount right at a news announcement, and with the hopes that only one of them will trigger, and you'll get carried a little bit, since somebody in a prop firm challenge was doing that and found some success with it. That's it's awfully risky, but it would be interesting to maybe try with a micro sometime. That's not something I've done before. The problem is, price can easily, depending on how crazy the announcement is, you're not going to get filled. The only way that you get filled is if you get filled before the announcement. So you'd be slipped regardless. It's just a matter of how much. The conditions could exist where you get triggered into one and then limited out on the other one pretty fast. Like for what would then become your stop loss, your other limit order. Oh. So anyway, that might be interesting to try sometime with a micro or something, just to see what would happen. Do I think it's a good idea? No. Clearly no. But would it be interesting to try? Could it work? Maybe we'll try it sometime. Ocean Wave makes an interesting comment where he says, with Forex brokers now, not all of them, maybe now, but before Forex brokers, you could lose more than your deposit, depending upon what type of dealer it was. But essentially, regulated markets are the only place where you can lose more than your deposit. And I don't think he's wrong, really, but there's a very good reason for that. And I'm going to be doing probably a little series of videos on the different types of instruments, and going a little bit further in depth between stocks and futures, Forex, crypto, and that, how it works, how it trades, and just what the differences are for somebody wanting to get started day trading or whatever it may be. The thing is, the reason that you can lose more than your deposit, which sounds terribly bad, realistically, that almost never happens. Um, if provided you have any common sense, number one, and number two, your broker is quick to liquidate you, which they usually are. It's something that very rarely happens, but it can happen, and if it does, it's pretty well guaranteed to be your fault. But the reason that I like that, hear me out, is because the reason that they cannot guarantee your stop loss is because it's an actual market. And what I mean by that is, um, a regulated market like the stock market or the futures market, you can lose more than your deposit because they can't guarantee your stop loss. That's only because you're trading an actual market with other actual market participants. So if the market doesn't have a bid for your stop, then it's going to get slipped, right? Simple as that. It works the same for stocks or for futures. Forex and crypto, for the most part, especially with Forex, you're not trading with another person. Like the person on the other side of your trade is not, me or somebody else that's actually sitting on a trading platform. The person on the other side of your trade is your broker, whether it be your crypto exchange or your Forex broker, your CFD broker, whatever. And because they're the one on the other side of your trade, they make the market. So they can guarantee your price. And while they don't really have slippage in the Forex and CFDs and crypto and that, technical slippage, they do have spread. And the fact is, whenever you're trading against a broker that's making the market, they can manipulate that bid ask however they want, and they will widen the spread when they feel like it, as much as they feel like it. And that can and will push the spread right into your stop loss from time to time. Some brokers were very notorious and clearly malicious in doing that. Some maybe not so much. But the fact is they're setting the price and you're trading with them. When you make money, they lose money. And I don't like that. And in fact, when I was trading Forex, I went through several different brokers. And I know this from firsthand experience. Now, not everybody. I know people that trade Forex profitably full-time still, and they've done okay by eventually finding a broker that did not do this. Oanda seems to be the main one. But if you're profitable, especially if you're trading a larger size, the broker will artificially widen your stops. And they will also eventually just say that they don't want to serve you anymore. That happened to me with 2 different brokers. And there was no good reason. It wasn't, we don't serve Canadians anymore. It's just, I'm sorry, we're not able to meet your needs. Take your money, whatever. So unfortunately for me, that got rid of the biggest advantage that Forex had to me, and that was offshore leverage. I had found a couple of brokers that were very low spread and that didn't manipulate price very much, and that had 500 to 1 leverage. So I didn't have to put much money there. And it was going okay for so long until I started to see the spreads widen. And then eventually they just said, sorry, we're not going to serve you anymore. So then I wound up with Oanda. Oanda worked great, but you do get wider spreads with them, and the spread does artificially inflate. Not to say that they're out to get you. I think they're actually quite good. But the fact is, they're making the market, and they're deciding whenever the spread widens. The bid and the ask is set by them. And that's not the case in the futures market or the stock market. Bottom line is, I don't want to trade with a broker that makes money when I lose. My brokers make money when I trade, period, win or lose. That's what I want. Anyway, guys, I'm going to have to cut it for today. I will get back to this and do some more Q&As. I'm almost at the rink now. But thank you so much for being here, guys. I'm sorry I've been away. I will be back to somewhat normal next week, depending on how I feel. But it feels great to be doing this, and I really hope you're all doing well. Grab my cheat sheet newsletter, daytradernextdoor.com. Keep your questions and comments coming. Have a fantastic day, and I'll see you again soon.